Have you ever looked at your tax forms and wondered if you are choosing the absolute best way to file to save money and stay compliant? Deciding on your tax filing status can feel a bit like solving a puzzle, especially when options like head of household and qualifying widow or widower come up. No, head of household and qualifying widow or widower status are definitely not the same. While both can offer significant tax benefits compared to filing as single, they have distinct eligibility requirements set by the Internal Revenue Service. It is really important to understand these differences because selecting the correct filing status ensures you get the right tax rate and deductions. The core difference lies in your marital status and the time frame after a spouse's passing. Head of household is generally for and married individuals who provide more than half the cost of keeping up a home for a qualifying person, such as a child or dependent, for more than half the year. On the other hand, qualifying widow or widower status is specifically for individuals whose spouse passed away within the last 1 or 2 tax years, and who meet certain additional conditions like having a dependent child. This status allows them to temporarily keep some of the tax advantages they had when filing jointly with their spouse. To figure out which one applies to you, first determine your marital status on the last day of the tax year. If your spouse passed away during the tax year or the prior year, and you have a dependent child, you might qualify for qualifying widow or widower status. If you are unmarried and financially support a household where a qualifying person lives with you for over half the year, then head of household might be your best option. Remember, you cannot claim a deceased spouse as a qualifying person for head of household status. A key benefit of qualifying widow or widower status is that it allows a surviving spouse to use the same tax rates and standard deduction as someone filing jointly for up to 2 years after the spouse's death. This is a substantial advantage, often providing a lower tax liability than head of household status. The Internal Revenue Service designed this status to provide a transition period for families adjusting to the loss of a spouse, acknowledging the financial adjustments involved. Understanding these unique requirements ensures you leverage the appropriate tax benefits for your specific family situation. Accurately choosing between head of household and qualifying widow or widower status can lead to lower taxes and greater financial stability during what can be a challenging time. Always take a moment to carefully review your circumstances each tax year to ensure you are selecting the status that truly reflects your household and provides the most favorable outcome.